Hey y'all, I'm gonna make this video. Check this out. Just because something is not a scam, that don't mean you're not being robbed. Because you can have something totally legal, but that don't mean you're not being robbed. And on this video, I'm about to show you on how you can be robbed. If you're not careful, I'm telling you, they're gonna take you to the bank. And for me, and my understanding of numbers, for me, this is robbery. But I'm just going to break this one simple one down to you guys. Just check the video out.
Under 60 seconds, learn how this IUL works for a 50-year-old to build cash and pay him a retirement income tax-free. So starting out, he put $25 in to open the policy. Then for the remaining years, he paid in $30,000 per year for a total of $295,000.
Right. So this guy is starting off with $25,000 and he's putting in $30,000 a year. So that $30,000 a year is $2,500 a month. So let's put that in a calculator and see what that's going to yield us. So instead of an insurance policy, we put the $25,000 in the S&P 500 and they got 14.5% over a 10-year period. So it's $691,254.00 that made after 10 years. And remember, it was only $295,000 if you just put it in the IUL.
Which gets you a starting death benefit of $426. By the end of the time he pays in, he has about $313 built up. Again, only paid in $295.
All right, y'all, did you see that? After 10 years, they got a cash value of about $300 and some thousand and a life death benefit of $700,000. You almost got that much saved up in the investment account. Let's keep going.
So you can see we set this up to start receiving payments at the age of 65 of $52,000, $520 per year tax-free. That is a reduction of the cash that has accumulated over the early years of the policy.
Okay, y'all see what's happening? He's only funding this insurance policy for just 10 years and he's not paying anything else on it. And he's going to start receiving $52,000 a year from the policy. So let's see what that is. So if we take the amount of money that he would already have saved in 10 years, and we're going to continue to invest it for another 6 years, we want to see how much money that's going to turn into. But we're not going to add any more money per month. So we want to calculate that to see how much money he would have at the end of that period. He would have $1,557,652.57. And remember, this insurance policy he's losing value on it as he withdraws it out. But now you got $1.5 million. Which ones would you rather have? Would you rather have the $700,000 life benefit or $1.5 million after the 10-year period? Let's keep going.
So we set that all the way up to pay out till he is 85 years old. So what do you think? Is this a good deal? The most he ever paid into the premiums was $295,000. As a tax-free retirement, he was able to take out over $1 million. Follow my page. I'll show you how to do it for yourself.
Ain't no way in hell I'll follow your page unless I wanted a good laugh. Now after we've got all that money, saved up, he's continuing to get $52,000 a year from this insurance policy. And at the end, he's going to have a $1 million policy. Well, let's see what happens if you would put that same amount of money in the S&P 500, and then you're going to extract 3.5%. That's about $52,000 like he was getting in his scenario. We're going to extract $52,000 from it, and let's see how much money we're going to end up with. So he went all the way to 85. So that's in another 19 years. Let's see what 19 years of growth with no additional input on your behalf, minus the 3.5%. Look how much money you have. $20 million. There's no way in hell you can sit up here and want to get a IUL. There's just no way after you see these numbers here. All right, y'all. Yeah, be careful with those numbers. Be careful who you follow. Be careful who you trust. You're going to have to dig deeper, find somebody that knows this stuff instead of following somebody on the internet or whoever come into your life. They're all trying to get a hold of your money, from the federal government to your family, to scammers, to insurance company. All want a lot of that money that you got in there. And it may sound all right. And I'll end it with this. Look, this dude has said for 20 years he's going to get $52,000 off this money. And I would like to say to you, could you survive right now off the amount of money that you was making 20 years ago? Probably not. Inflation is going to kill it. So this is an absolute useless policy, in my opinion. You're going to get 10 times the amount of whatever it's promising you if you just invested in a simple index fund, SP 500 index fund, Vanguard, Fidelity, something like that. Any financial advisor can advise you on this. So don't get caught up in the hype. Don't lose your money. I'm just trying to make you guys aware of this stuff. It's not advice. Talk to you in the next video.